topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert Show on W4CY Radio and Talk4 TV, where we bring you educational information from experts on such topics as legal, health, financial, and home improvement. Now sit back and listen to our experts in community association law, estate planning law, tax relief, Medicare, public insurance adjusters, neuropathy treatment, business brokers, and personal injury law, along with many other topics. Now here's your host for the last 17 years, Steve O.
Good morning, Houston. Welcome to another Ask the Expert show, where for the last, like the man said, for the last 17 years, we have brought you the top experts in the field of legal, health, financial, and home improvement. Hey, good morning, TikTok. We are just so excited. I'm seeing so many new viewers. Our guests this morning, we're talking about the IRS. And let me tell you something, if there's anybody who can get you out of trouble with the IRS, Taxation Solutions, welcome. Just getting back from his trip from Alaska. Good morning, Barry Fowler.
Hey, good morning, Steve-O. Man, it's great to be here. It's a little warm here in Houston compared to Alaska. There's about a 55-degree difference between where we were and where we are today.
Hey, no kidding. And Barry and I were just talking because I've been to Anchorage many times. And what was so weird is it stays this certain times of the year, it's light 24/7.
Oh yeah, it was crazy. I mean, we got usually it was down towards Anchorage. I think it was closer to 5 or so hours of nighttime. But when we were up in Fairbanks, the sun really never went down. It was still light at 2 a.m. in the morning, even though sunset was, somewhere around 12:30, and then sunrise was supposed to be around 4. It seemed like it never got dark. So. But it was fun. Now it's back to reality and fighting the IRS and putting those problems to bed. We had great staff taking care of things while we were away in Alaska. So, we didn't miss a beat here.
Hey, Barry, you know what? We've got all these new listeners, and gosh, our show this morning's already got 593 likes already on TikTok. But there's so many people, and Barry's been with us for over 15 years now. Barry was one of our first, and he's been with us forever. People love his show. In fact, he's got his own show right after this show. He does another hour-long show.
We get to double dip today. We come back from vacation, and first day back, and what am I doing? Radio in the morning and radio right after that. And tax talk for you. So it's going to be a great day getting information out. We're actually going to approach a subject that people don't like to touch: politics and taxes. So it's not a conversation you have at the dinner table. And
hey, Barry, I want to tell you something. I mean, Barry, my politics, you know them well. You've seen a lot of my stuff on the internet, but I want to, the people, and I wasn't even going to talk about this, but you kind of hit a soft spot. There are so many people, Barry, and you've actually explained this once before to me, who think that this tax bill that was signed last year by the president is only for the wealthy. And I know for a fact that's not true. Can you explain that to people?
Let's start out first off, the wealthy don't get tips.
Yeah, right.
Second part, the wealthy don't get overtime. So those two things right there, we're helping, you might say lower income people that aren't making, 150, 200, $300,000 a year. The overtime part of it, it helped people pretty much that work anywhere that receive overtime. So, even if you're making $75 or $100,000 and then you get paid overtime on top of that, you were saving money on your taxes. So it was helping everybody across the board with the taxes. It also increased or re-put in the business deductions that we were fixing to lose. And so it helped small business owners. It helped, regular business owners. It helped everybody across the board. What it did for the wealthy is just maintain the status quo as far as the brackets went. What we were going to be faced with if they didn't pass the one big beautiful bill was reverting back to all the way back to 2017's
Right.
tax rates, deductions, and everything else. And it would have impacted the lower income people more than it would have impacted the rich people. The rich always have accountants, CPAs, enrolled agents, people working for them to find every little nook and cranny to get every deduction possible. So maybe they do other investments that give them better deductions, things that most normal people aren't going to be doing. So they're going to find those regardless because it's tax planning. Now, the most people that are just on W-2, earning tips, getting overtime, things like that, they don't go through that kind of planning. They don't want to spend the money on that kind of planning. And then that kind of planning isn't always worth it to them to do it because it's not going to save them as much money, not going to lower them down to maybe a 0% bracket or something. So, when you sit down and you look at it, and you're a W-2 employee and you don't have the opportunities to make those kind of investments and stuff yet, and maybe you'll grow and get to that point, that having the lower brackets and having the bigger standard deductions and things like that really help you. And so, you can listen to the news, you can listen to the radio, you can listen to all these other people talking about how it helps the wealthy. Just look at what happened on your return this year. Because, we do taxes for people and, we look at it and can tell you this saved people more and more money than ever before and lowered the number of people that are actually paying taxes into the system versus the previous bill. And going way back to 2017 helped many more people than you could ever dream of.
Barry, I got to tell you, we have got 3 areas that I want to touch on today, only because we got so many emails. The first one is people want to know, what is an enrolled agent?
My father, years ago when I became an enrolled agent, he goes, "What is an enrolled agent?" Just like everybody else. Do you not work for the IRS? Oh, heck no. Not in a chance would I work for the IRS. An enrolled agent, we're actually licensed by the U.S. Department of Treasury to represent taxpayers to the highest levels of the IRS. We don't go into tax court, but we can work against the IRS representing you to the highest levels. Now, we had to be tested. And then once you pass the IRS test, that you go through, the Department of Revenue's test that you have to go through, which is on multiple years of taxes and the tax code, ethics, you name it, it covers it. And then you go through an FBI background check, which I was like, wow, this is interesting. We got to do fingerprints and the whole works and get checked. And then you got to do continuing education every year. And I run somewhere between 30 to 40 hours of continuing education so that I'm always going to be the smartest one when you're getting representation, because I want to know more than anybody else that's out there. And so it allows us basically just to step into your shoes and represent you and communicate with the IRS just like we are you, and get you that representation that you absolutely deserve, so you never have to talk to the IRS.
Barry, sometimes, like, for example, when we're trying to choose a doctor, and we might have to go to 2 or 3 different doctors before we find the right doctor. So we have gotten a lot of letters, and I'm going to bring this one letter, a guy from Sugarland. And I felt so bad for him. He said, I had tax problems and I saw a commercial on TV, and I ended up going with them. Cost me a lot of money, and they did nothing for me. I felt like I was ripped off and I wasted a lot of money. But he said, I always believe in second chances. So I went with another company, paid them a lot of money, and the same thing. He said, I've been listening to your show for several months, and I really like what you say, but I'm so nervous about signing up with another company. And we get a lot of letters like that, mostly people who went to a company, big company with a celebrity, and felt like they got ripped off. I've never heard anybody, not saying there might be one person out there, but I've never heard that with taxation solutions. But can you talk to people about that? Because I'm sure you hear clients who went to somebody else who felt like they got ripped off.
We hear it all the time. And, sometimes the interesting part is that people call us and they don't believe what we have to say because people want the dream, the pipe dream.
Yes.
You want to win the lottery, right? Everybody wants to win the lottery. So if somebody said, hey, if you buy a ticket from X, Y, and Z, you're going to win the lottery. Well, you want that dream, correct? We all want the dream. We'd all love to be billionaires by winning the lottery or, getting lucky or, maybe being the smartest person in the room like Elon Musk. And if you happen to be, that person, great. If you're looking for luck and you're looking for, hey, this is got to fall into my lap, everybody and anybody is going to sell you that pipe dream. They're going to sell you whatever you want to hear. And that's what you fall for. And, here at Taxation Solutions, we're not selling the pipe dream. We're selling reality. We're going to tell you, hey, this is what we can do. And maybe this is what we can't do. We had a guy call the other day and he goes, hey, I was referred to you by another CPA out there. And he told me you could get us an offer in compromise. And I said, well, the guy's wrong. You make too much money. But let's talk about your problem. And he's going through his problem. And I went, well, realistically, what you need is to file for innocent spouse. Because your wife took advantage of all this stuff, didn't follow through and do the taxes. You actually never seen the tax returns. You never signed your tax returns. And so therefore we should be able to go after and get innocent spouse for you. And he's like, wow, I've never heard that. Yeah, it takes a lot more work. It's a lot more effort to go through and do this, but this is the right way of going through and doing it. We can get you off of it. And your soon to be ex-wife will be the one that's going to be stuck with the tax debt. And then, he's sitting there talking to me and says, well, no, we're just going to go through divorce and we're just going to sign a divorce decree and she's going to agree to pay all the tax debt. The IRS doesn't follow the divorce decree. We need to get this. Well, that's not what somebody else said, so I'm going over there. Hey, it is what it is. That's where you need to go. You get in the dream because they say, hey, you can get an offer in compromise. We know what reality is. A few weeks later, he called me back and goes, Mr. Fowler, you're right. We've got to do something different. They can't qualify me for this. And the IRS is trying to hold me accountable for the tax debt, even though I have a divorce decree. All right, we're good. Let's go. So you kind of got to watch what people are saying. You've got to really talk through it. If you've got income and you've got assets, you got equity, there may not be a way to get an offer in compromise. It really depends. So don't fall for what, some of these people are just going to sell you to do. We do a complete tax analysis, so we know exactly what is going to happen to you, how we're going to approach it, and what we can do for you in this free consultation. So, give us a call, 888-930-1016, 888-930-1016. Let us start talking. And maybe you don't like what we have to say and you want to go a different route. God bless you. We wish you the best of luck. If you really want it done right, you stay with us and we work with you to make the best decisions with you to fight the IRS to get you the best solution you qualify for.
Barry, we had a gentleman from Galveston saying he really enjoys your show. He actually watches your Monday show right after ours also. And he said, I'm curious to know, from the amount of people who call your office with the IRS's figures that they say they owe, what percentage of those are usually wrong?
Well, first off, anybody that calls me and gives me a figure that they think they owe from the IRS, they're usually 100% incorrect, because the IRS has different numbers than what they're thinking. I have people that'll call in and say, hey, I owe 20 or 30,000, and we get to do an analysis with the IRS and they owe 40 or 50,000 that the IRS is saying. A lot of times they haven't filed returns, and so there's what is called SFR, substitute for returns, out there. And so we can go in and file that return and get it down to the correct amount. Sometimes they've gone through an audit and they never fought the audit, and we need to go through an audit reconsideration. So there's different variables out there. A lot of times the IRS is wrong. Now, if you filed all your returns and you had somebody file them correctly, then yeah, the IRS is going to be right because they have your numbers and they've used your numbers to get the information of the debt that you owe. Now, they added a lot of penalties, they keep adding a lot of interest, and that just compounds and compounds and compounds until it's just an unruly amount of money that you owe and that you need to find that solution. You got to get that IRS off your back sooner rather than later, so that you're not faced with that mounting debt that you can't afford to pay. It really, the penalties and interest the IRS charges really makes it tough on each family and individual who owes money to the IRS.
This is from Arthur in Houston. He said, I really appreciate your show. I'm sure you've explained this before, but is it hard to qualify for an offer in compromise?
Absolutely. The IRS does not make it easy on you. We're going to first start with assets and equity, like in your home. How much income do you have coming in? What do you have in your retirement accounts? All those things are going to add up together to determine whether or not you can qualify. And then we have to add into that, you've got to be in compliance, 100% in compliance, meaning all your taxes have got to be filed. So you can't have any missing tax returns that are not filed. If you're required to make estimated tax payments, you've got to be current on your estimated tax payments and stay current on them. And then on the flip side of that, you've also got to make sure you're filing timely. So while the offer is pending, everything's got to be filed timely and paid correctly. And then for the next 5 years, if it does get approved, you've got to stay 100% in compliance. So there's a lot of difficulties that go into an offer. We had a client who was making really good money, but they never paid taxes. They were owing close to $900,000 somewhere there. And they insisted on going to an offer in compromise, which they sold their business. So now they could qualify for that offer, but they had a lot of cash from the sale of the business. So the cash would have to go to the IRS. We were looking at a settlement for about, $500,000 on a $900,000 debt. Not too bad. They get to save $400,000, but they would have to pay all the cash that left from the business. Unfortunately, we're in the middle of this offer, and what did they do? They spent most of that money. And so now the IRS considers it a dissipated asset, and the offer's not going to go through. So you got to remember that, hey, even though the offer's filed, then you've got to make sure that you're staying in compliance and you're doing things correctly. Now, speaking of dissipated assets, that's something else the IRS goes and looks at. Because if you have spent a bunch of money, maybe you've pulled money out of retirement, maybe you've had cash or you had something out there, and they see that you've been spending that money on non-necessities, non-things that would qualify, the IRS can determine that's dissipated assets, and that's money they want in that offer as well. So there's a lot of technicalities behind it, so it gets really difficult. But if you're working with us, we go through that analysis with you. And as long as you're upfront and honest and being able to tell us and explain stuff to us, we can help explain it to the IRS, and we can help you get down that road to qualify for an offer if we determine that you can qualify. If you don't qualify, or we determine, hey, look, the offer is just not the right way to go, we have other options to help you get to the same point, potentially, depending on income and other things that are happening in your life.
Another question, this is from YouTube. He said, oh, this is a good one. He said, I really enjoy both of your shows. What is your show today about? I guess your show after this one.
Hey, my show today is politics and taxes. It's one of those things that if you were gathering family together, you don't want to get into a conversation of politics and taxes. Matter of fact, you don't, when you're traveling, don't want to get into a conversation with somebody about politics and taxes, because your wife's going to be elbowing you, telling you to shut up because you're too opinionated. But other people are opinionated too, and when they're wrong, sometimes you just got to tell them they're wrong. So, that's what we're going to be talking about today. I'll leave some of those surprises and some of those conversations while we were on our trip to that show. So you got to tune in right after this, the Tax Talk for You today.
That's amazing you said that about family, because my sister, who lives in Dallas, I don't know, for the last 2 or 3 years, she has not been as friendly as she is most of the time. And I finally asked her if there was a problem that I didn't know about. And she said, well, I read a lot of your statements on Facebook, and I don't agree with you. And anybody who speaks positive of our president has got to be a fool. And I could not believe that, because I could care less what her politics are, but it's amazing. So you're absolutely right. Politics does get in the way of family.
Yep, it does. And it gets in the way sometimes of making friends while you're on a trip.
Oh, yeah. That's correct. I got to tell you, I saw yesterday a guy was doing a live reel on the Anchorage airport. And I've flown in there many a times, and I could not believe how busy that airport is. It is a major hub, and there's I would say, carriers that fly out of Anchorage. I never knew that.
We didn't get to the Anchorage airport. We flew into Vancouver, and then did a little cruise for 7 days to Whittier, and then we took motor coaches and the train from there all the way up to Denali, and then on to Fairbanks. So Fairbanks was a small little airport, and it wasn't super busy. I mean, for the number of planes flying out of there, it was busy, but we enjoyed that, so it really wasn't too bad.
Did you see any moose?
Yeah, we saw moose. We didn't get to see any bears. We saw a marmot, which scared the craziness out of us because we were standing and taking a photo by this rock that had an overhang while we were walking the Savage River Trail in Denali. And on our way back, we were backtracking to go back instead of taking the big loop around. And as soon as I turned the corner where that rock was, where we were just at 10 minutes before, there was this 3 foot, 2.5 foot long marmot sitting there looking at us. And we were like, oh my God, we were just there. So we were standing there taking pictures of it. And, it was looking at us going, why? And so it kind of scared us as we came around the corner going, wow, we were just standing there. So we didn't get to see any bears or anything else like that, but we did take some boat trips and see whales and orcas and seals and all those fun things. So it was a glorious trip. If you've never been to Alaska, you got to get to Alaska. And
Yeah. I got to. I was looking out my window at downtown Anchorage, and I see a moose just walking down the street. No one even looked at him, just like it's no big deal. Happens all the time. And I was like, I can't believe I see a moose walking down downtown Anchorage. Crazy. But anyway, we'll get back to IRS.
Got to have some entertainment. I mean, IRS, talking about the IRS isn't as exciting as sometimes you're talking about your trips and things. When we save people money and we get the offering compromises or we get the partial pay installment agreements in place, that's exciting to our clients. So you got to have a little bit of break in the monotony of talking about tax resolution. Was talking about some great trips.
Here's someone from YouTube, Norm in West Texas. Now, I've always referred to the western part of Texas as West Texas, but I didn't know there was a city named West Texas. Anyway, he wants to know, what do you know about hardship deferral?
So, Norm, what that really is going to be is a non-collectible status. So basically, the IRS determines that there is nothing they can collect right now. And that just means right now. If your life situation changes anytime, it can change what they put you in. Then they come after collections. So basically what they do is they'll put you in non-collectible status for basically 2 years. But if your income goes up when you file your tax return, they can come back and ask for information again. If after 2 years they're looking at it and determine that they need to request more information, they can come back and request more information. So you can end up falling out of that non-collectible status at any point in time. But it buys you time to, get your life back in order and start paying them back. We use that when there is truly a non-collectible status that we don't see anything's ever going to change. And it's not worth going after, let's say, an offer in compromise because of the restrictions on it. Putting you in non-collectible status allows the statute of limitations to continue to run. And maybe the debt will fall off over the period of time while you're in that non-collectible status. So there's different ways of using this to get you the best outcome. Now, if we're looking and talking with you and something's going to change in the next few years, maybe you need to be in a partial pay installment agreement where you're making a very low payment to the IRS and the statutes continue to run, but it's not something they're going to come back and look at 2 or 3 years down the road, and all the debt will either fall off or get you in a better position to at that point. So there are other options, and especially if you have some equity and some assets that you can't touch, like maybe your house has equity in it, and we can put you into non-collectible or partial pay installment agreement and not have to worry about the equity in the house. Whereas an offer in compromise, that equity in the house would have to be accessed to pay the debt to the IRS, and many people can't afford to do that if they're truly into that status of being non-collectible. So, and it has a little less hurdles to get over. So they're not going to be looking at necessarily national standards to make you qualify for non-collectible status. They can look at what you're actually doing. Although they can say certain things don't qualify for that. So we've got to work with you to make sure you're in the right position for it. Same thing for partial pay installment agreements. It gives you a little bit more flexibility on what expenses they allow. And we're not having to deal with national standards as we would in an offer and compromise. Now, the national standards in an offer and compromise, because I know that's the next question, is what the IRS limits for your expenses for things like housing, utilities, food, clothing, insurance, car payments, and so forth, things like that, that they have a very hard limit at, depending on where you live, city and state, makes all the difference in the world how you're going to qualify for that offer and compromise.
So I've got about 6 people from TikTok all asking the same question, but basically is, what if you can't pay the IRS?
If you have assets, the IRS is going to ask you to liquidate assets. They're going to try to find the money. I mean, you got to understand the IRS is the world's biggest, baddest collection agency there is in the world. But at the same time, if you can't afford to pay, that's where we start looking at this non-collectible status. We start looking at putting you into a partial pay installment agreement, things like that, or we look at an offer and compromise. So we go through and do all the analysis to determine where you're at, how you're going to either pay this debt back, how you're going to put a solution in place for this debt through offer and compromise, non-collectible, partial pay installment agreement, stepped installment agreement, temporary holds, things like that. Everything we need to put in place, we need to do to help you get you in the best situation and the best solution. So what your family can get back to living their life without looking over their shoulder to see whether the IRS is there waiting to take everything that you own and everything they can get their hands on. And trust me, the IRS can take your house, take your business. We have seen it. If you don't believe it, you can go to the Department of Revenue's website for auctions and you can see the things that they have up for auction that they have taken from taxpayers to pay their debt.
Barry, from doing the show for as long as we've done, I know it has got to be a huge burden on someone's shoulders when the IRS is after them. You get to see before and after, before you started with them and hear their story, and then after you've helped them. Can you share that with people, what it's like to finally get the IRS off your back?
It's kind of like finding that perfect person in your life. And when you find that forever person, you get relief, you get excitement, you are overwhelmed with joy. And that is kind of what it'd be like to get a solution to your IRS problem, except for one difference. That perfect person that you found and you were ecstatic and happy with, who is now has been mad at you, upset, worried, concerned, and always looking over their shoulder, and then always berating you because you didn't man up and deal with the tax problem, is now absolutely in love with you again and extremely happy because the relief of knowing that the tax debt has been dealt with is off your shoulders, out of your life, and you are completely overjoyed. And that is what we see and we hear from our clients when we get offers and compromises, or even partial pay installment agreements, or even, getting somebody in non-collectible status and being able to tell them when the debt's going to be going away, and then being able to do transcript monitoring to be able to tell them, hey, look, this 10,000 or 20,000 just fell off. Hey, look, you got to make sure you do this so you stay in compliance so you don't lose your offer and compromise. That is absolute joy and relief. And the best way I can put it, I mean, when you're down with stress and looking over your shoulder and worried about when the IRS is going to take your bank account, or they're going to levy on your house, or they're going to liens on every single thing that you possibly could own, offering compromise, a solution to your problem, is relief that makes you overjoyed. I mean, I don't know how else to put it. It's a big party.
Marvin in Tomball. I'm so glad there's a show out there like this. Thank you so much for your time. I'm going to be tuning into your show after this show. My question is, can you file bankruptcy off of money owed to the IRS?
Yes, you can, but you got to be very, very careful. There are certain rules and restrictions on what debt can qualify in bankruptcy. And then you got to make sure all your tax returns are filed. And then there are certain returns that can be included in bankruptcy and certain ones that cannot. And then there are certain debts that can go away in bankruptcy and certain debts that cannot. Now, you talk to bankruptcy attorneys and they tell you, hey, we can take care of all of it. What they're not telling you is some of that's going to just end up in a payment plan with the IRS. And, sometimes you're better off going through and getting an offer and compromise and compromising all the debt to the IRS. If you're going to qualify for bankruptcy, you could possibly qualify for that offer and compromise first. And then after that has been accepted, turn around and file for bankruptcy somewhere else down the road. What that does for you is gets rid of all the tax debt because of the bankruptcy or the offer and compromise, and then allows you to get rid of the rest of your debt that you're dealing with in a bankruptcy. So there's things we've got to look at and talk about before you decide to go through that bankruptcy, and look at what debts you have, and then be able to do that analysis of what would qualify and what wouldn't, and then which way you would be better off going. So if you have a bankruptcy attorney you're working with, we got to make sure that all the debt is going to qualify for bankruptcy, not just some of the debt. And then if your bankruptcy attorney is willing to work with us, then we can work with him or her to help determine what's going to be the best route. Most bankruptcy attorneys aren't going to want to do that because why? They just want to charge fees. They want to just get you into the bankruptcy and get done. They're not a care whether or not you're going to have to continue paying the rest of the IRS debt, because they're going to say, well, now you can afford to pay it because all the other debts have been compromised or solved, and you got to continue paying the IRS, where we could have gotten rid of all of it before you went through bankruptcy, and then you deal with bankruptcy later. So we've got to look at that. If we determine that, hey, with your bankruptcy attorney, that all the debt can be settled in bankruptcy, then, hey, we want you to go through and do that, because it's just charging one fee, which is to your attorney, and he or she can get rid of all of your debt through the bankruptcy. But it's got to be done carefully. But good question.
Yes. So, Barry, this is another question from TikTok. How long is the average? Realizing that everybody's situation is different, what's the average length for the process?
So the offer and compromise process can take anywhere from a year to a year and a half. We are always dependent on, guess who? The IRS. So we take somewhere between 2 to 3 months to prepare everything for the offer and compromise. and then we submit it to the IRS, and then you're talking about a year and a half from there. Um, and that process can be lengthened because sometimes our clients aren't forthcoming with information, and we've got to chase you down for information. But if we're getting the information really quick and we're able to get all the support we need, we get that offer turned in as soon as possible. Unless you're missing tax returns, then we've got to get those done as well. The other processes depend on you as well. We're looking to get in and do, whether it's a non-collectible status, whether it's installment agreement or partial pay installment agreement or stepped installment agreement, or one of the other solutions out there that we come up with. Kind of going to depend on you. Again, are all the tax returns that are required to be filed? And then if that is, we're going to move to the process as quick as possible to get you into that non-collectible status as we're going to go, or get you into installment agreement or partial pay installment agreement. Because we want to get the debt settled and off your back. In the meantime, first thing we do is get on the phone with the IRS. Once we have you as a client, we get your power of attorney, we call the IRS, we get holds in place immediately. So, we're already in communication, we get the hold, and then we start the process of moving you down the road to get to the best solution possible. And if we need additional holds, we call the IRS and we ask for additional holds. Now, if you've already been dealing with the IRS and you've made them mad, maybe you got a revenue officer and you just kind of dragged him or her up and down the road, they're going to get mad. They're going to want quicker action. So we've got to move quicker. They may give me 2 weeks to get all the information. They may not. So we're going to be moving as quick as possible to get the solution in place or offer a solution. And then we're going to know that, hey, our solution is 100% correct and the best one the IRS is going to get. And, when they refuse to give us the deal that we're expecting, we'll appeal it. And we'll have a hearing on it, and we will work our tails off to make sure that we get the deal in place that, we know we can get. And we're usually very, very aggressive, so that we're trying to get a better deal, even though we know the IRS is going to want more than what we're going to be offering to do. We're going to be very, very aggressive to get it down as low as possible, and knowing we will have to compromise somewhere in between, or we can convince them to stay at our number. And we've done that many, many times, because our experts are truly the experts in the industry with the knowledge to be able to tell you, hey, this is what can be done. And then we're going to try to be better than that. We know this is what the number is. I do this all the time. I'll tell a client, hey, this is your offer and compromise number that the IRS is going to require and going to accept, but we're not going to offer that. We're going to offer something way less than that and let the IRS come back and negotiate with us to get that number up to where they're expecting it to be. So we may compromise somewhere in the middle. We may compromise on our number. We may end up having to go up to it, but you are aware of it from day one as we're working through this before we ever submit offers or partial pay installment agreements.
Ken in Huntsville, Texas said, I heard you talking about innocent spouse. Can you expound on that?
Yeah, absolutely. Innocent spouse. And the funny story is most of the time it's the wife calling us and saying, hey, my husband has done this or done that, and I wasn't ever aware that we had this tax debt. People hide things. Spouses hide things from other spouses. You see it all the time. But a lot of times you got financial things going on. So the husband may be running a business and he's not doing things legitly. And so the family ends up in trouble. Or I've seen it all the time that somebody came in here and said, as a couple, we're doing our tax return. He's the only one that ever comes in. And this used to happen in, olden days when you had manual signatures and we couldn't do e-sign. They would come in and he'd be the only one we'd ever see. And the next thing you know, He's going to take it home to his wife to sign. And he walks out to the parking lot and comes back in and turns it in. It's basically the same signature. We wouldn't accept it, but other people don't care. And so the wife never saw a return. Or the husband takes it to the wife and says, here, just sign here. This is our tax return. And the wife blindly signs because why? She trusts her husband and, hey, this is the way it's going to be. And I don't know enough about taxes. Why am I going to look at this? And I'm just going to blindly sign. So the spouse at times can be 100% innocent in this. And if that spouse is innocent, then we can file innocent spouse with the IRS and get them relieved of the tax debt for their portion of the debt for the family. So, you may be sitting at, 40,000, 50,000 of debt, but it's all caused by your significant other, your spouse, and, we can get you off on that. It's a hard hurdle to get over, but it does get done. And we've got to have good reasons. We've got to be able to show what has happened. We've got to be able to communicate to the IRS that your spouse, you as the spouse, was not aware of what was going on. So we work through that to get you off. Remember, if you are going through a divorce or something, because I see a lot of times tax debt, when a family leads to divorce. And if you are going through a divorce and your husband or your wife signs to agree to pay all the tax debt, even if they don't pay, you can be held liable for all that tax debt because the IRS doesn't follow the courts and the court's opinion on a divorce decree. You're just as liable on that tax debt. They're not party to your divorce decree. It's only you and your husband or your wife that's party to it. So therefore, you may or may not have that protection. Now, if your husband or wife pays for it, then you're free and clear. If they set up an installment agreement and they're continuing to pay and everything, then you're probably free and clear. But until that debt's paid off, you could still be held liable.
Wow. Barry, we have a few minutes left. Because we get a lot of questions that people said they hired a company and when they were waiting to get their money, they would get on the phone immediately. Once they got the money, it would sometimes take weeks for them to get back. Explain to me, because I know how you run your company, explain to me and everybody how important customer service is to you.
Man, it's extremely important. We want to be in communication with you constantly. We're in communication sometimes too much, according to our clients. I mandate that we're in touch at least once a month with you. But as we need information or we need to give you updates or things happen or things change, we're always in communication. If you don't answer the phone, we email, we text. We want you to be aware of what's going on. Now, there's some things we can't tell you in an email or text. So we'll tell you to call us so that we can communicate to you and tell you what's going on. That is extremely important. And that's the way we handle business. Even when I was out of town, we were in communication with our clients. We were making sure that our staff was doing the things that need to be done. We had our other enrolled agents out here working to get things done. So we always have that communication and lines of communication open between us and you.
Well, final question. The show goes by so fast. Barry, tell people how they can reach your office.
Okay, you can go to taxationsolutions.net, do a contact page over there. So it's taxationsolutions.net. Better yet, just give us a call at 888-930-1016. Again, 888-930-1016. Hey, if you mention Ask the Experts, we give you special discounts on everything that we do. We're more than happy to help you as a client of ours, as a listener to Ask the Experts. So make sure you mention Ask the Experts and we'll give you that special discount. Again, it's 888-930-1016. And then hey, we're ending this one, but you can continue to listen to me at Tax Talk for You. We're right after this show. We'll be on right at 9 o'clock Eastern Time, 10 o'clock here Central Time, right here in the same station. So tune in over there so we can continue to give you more information. And thank you, Steve. Man, we always appreciate you and Ask the Experts. Man, tune in here and then tune in to us every Monday.
Hey, and I want to thank our 4,600 likes from TikTok. We appreciate that. We appreciate that. And thanks for tuning in today. Barry's going to be with us again one more time this month with our national show. Barry, I'm glad you're back. Glad everything went well. And hey, all the luck with your next show. I know it's going to be another great show.
Thank you, Steve. We really appreciate you and Ask the Experts, and everybody else. We'll see you at shortly here at top of the hour.
Love you, bro. Take care.
Take care.
That's Barry Fowler, Taxation Solutions. Folks, I'm telling you, if you've got a tax problem, do not handle this yourself. Hey, that's going to do it for us today. We'll be back again with you tomorrow with more Ask the Experts.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.